All right, so boom, welcome to Options Pit Bulls Alerts. We are happy to have you and welcome to the Pit Bull family. You are going to be a Pit Bull now, all right? So, first off, this is not financial advice. I am not a financial advisor. I am simply a successful trader who shares what I'm doing with you guys so you can learn, copy, have ideas, whatever you want to do. Take it as ideas, though. Come up with your own strategy. Now, if you've never traded options before, you're going to want to take the options trading course. It's pinned in the pinned messages. It's also pinned in the Facebook group if you're in there. If you're not, make sure you get in there. It's called Options Trading Secrets. Next, I recommend watching the alerts for at least 1 week, okay? So let's see, I'll go to my other pinned message here. New members read. Okay, this is a little bit about our standards. So yeah, I recommend watching it for about a week before you actually jump in so you can kind of get a feel for how the alerts come. Also, just kind of my game plan, my rules for the Pit Bulls. What we do is we only invest and we trade in the best companies. So don't message me with penny stocks you want me to go chasing after. I won't do it. We take profits off the table. So when you're profitable, if your game plan is to make 100% profits, when you hit 100%, you don't sit there holding it and waiting for 200% and getting FOMO. You take your profits that you aimed for. All right, follow your goals. We plan the trade and we trade the plan. In that options trading course that's free in the pinned post and in the group, I have a trading plan in there where you can kind of ask yourself a few questions to get an idea of what type of trades you should be placing. Also, we buy the dips and we sell the ships. So if I'm buying something on a pullback and it keeps pulling back, don't be surprised. I'm trying to catch a floor. If you don't understand this concept, it's probably not the right style of trade for you, and look for other trades that are a little less risky. And own your trades. I'm not forcing you to get in any of these trades. If you make a bad trade, that's on you. If I alerted it, I'm sorry, but I give you the risk levels. It's rare that like the green or the yellow plays risk levels are going to be bad. If you lose, you might just lose a little and then a stop loss kicks in, or you're making on your short position with those or whatever. But with those YOLO plays, those red plays, be careful. If you enter those plays, you got to be ready to lose everything. With those plays, I'm going for a 500% return or 100% loss, all right? So, but Pit Bulls, we don't chase anything. Pit Bulls, we do not risk it all in one trade. If you got a small account, start small, slow, and smart. All right, we do not follow the herd. So just because somebody else is trading something doesn't mean we're going to trade it. We don't fear missing out. If a stock's running or if we missed an opportunity, oh well. The market's probably open tomorrow. It's not. I'm sure it's open in a couple of days. And we don't blame the world for our mistakes. We mess up a trade, take responsibility, learn from it, and grow. This is a learning experience. We're all here to learn. You'll see right underneath it, you got a link to Options Secrets course and a link to Webull if you need a new broker. All right. Next pinned post. See if this just takes me. This is a video of the 3 S's of a pit bull pup. If you are new to trading, you must watch this video. All right. Also, paper trading is a great way to get a feel for these trades, get used to them, and learn them. And then here's your risk breakdown, okay? So red alerts are a tightrope over the Grand Canyon, high-risk speculative plays. If something may or may not go up, it might lack volume. A lot of times I'm getting in like a SPAC that has a rumored deal of a merger a few weeks out, and I'm just getting in now to be safe because I don't want to miss. Usually they'll announce something pre-market or when the market's closed, when you can't buy options, and you can't jump in on that huge spike. I want to get in before the spike. Granted, these are usually cheaper. These are usually under $100 that I'm investing in the first place, and I'm looking for a 500 to a 2,000% return on these, usually 1 to 2 weeks out. Okay, so I'm not going to include a hedge here. I'm not going to be selling options off the options I buy. The risk is 100% of the investment, and it's either going to fly or die. So keep that in mind if you're entering any red trades. Now, yellow trades, they're medium risk. So the technical indicators are aligning. There's usually some volume, and the charts are showing a bullish pattern. There's often a hedge included. So, for example, if I'm buying a Tesla $700 call, I will sell a $720 call off of that call to lower the cost and lower the risk, therefore. There's usually a catalyst of some point, whether it's news or earnings. There's something that's causing me to enter this trade more than just a rumor or a whim, as the red trades may be. The expiration date is a little bit farther out with these, and it's usually 1 to 6 months out. Now, the return I'm expecting on these is between 50 and 300%. So with a lot of these, if I'm hitting 200%, I'm taking profits for sure. And then you'll see some green trades as well. These are hedged, and they have a high probability of a modest return. You're not going to be getting 200% on every one of these. you're not going to be getting 2,000% on any of these. All right, and that's usually because there's a hedge that caps you out, whether it's a put credit spread or a debit spread, or anything that's just buying calls is rarely going to be green, because calls are risky to buy. It's a trading option. It's risky. But these are a little less risky because they're hedged with a probability of a modest return. They're 2 to 24 months out, so you'll even see some leaps in these. They have high intrinsic value. So for example, I was buying the $10 calls and selling the $12.50 calls on a stock that was $10.40, and it was costing me $30 to do that. So essentially I was getting $40 worth of intrinsic value for a $30 investment, which is a great bet. There's no way to really lose with that. If you do, it's less than you would have lost buying the stock. All right, so those are the risk levels. I recommend you find your own style, find your own strategy, find your own risk tolerance, and then once you do that, you can better know which plays to pick, which to choose. Like I said, these are just ideas for you guys. Also, if at any time you need to cancel your alerts, you're going to want to email billingpitbull@gmail.com. That's billingpitbull@gmail.com. If you need to cancel for any reason, we'll get you out of there, okay? Also, if you want to upgrade to the VIP membership and become a Pit Boss, there's a form that you need to fill out. It only accepts 5 people into the Pit Boss program each month. But if you fill out this form, it'll get you on the waiting list. If I think you're a good fit, if I think you're ready, I'll be reaching out, seeing how we can help you out, okay? So I hope this video helps break down the alerts and set expectations correct. Let me know if you have any questions. I'm easy to reach on Facebook, Telegram, anywhere. I'm not quick to respond, but I always do get back to you, all right? Peace. Let's get some gains.